Good afternoon, everybody. It is Fantastic Friday, and we all know what that means. We got Mike Zuber from One Rental at a Time. How's it going, Mike?
Going well, man. Thanks. I look forward to this.
It's been a long week, man.
Every day's Saturday, man. Every day's great. It's awesome.
Yeah. Someday it'll be my Saturday. But the reason I talked to you today in this episode was because you are the Lumberjack Landlord's resident economist.
I appreciate that. It's an honor.
So because of that, I wanted to share with you exactly what we're experiencing here in the lovely Granite State, our state model being live free or die.
Okay.
A little bit different than California's model.
I have no idea what it is. Eureka? I don't know.
I think it's like, we like soft things.
Oh, come on. All right.
And beating Boston sports teams for championships.
Yeah.
See
like
how
that.
easy that was? All right. So I want to show you this thing, get your take on it. I think it's literally go through this with you so people can see this is exactly what you should be looking for in your state. You let me know that you see that.
I do. I see it. Yep.
Okay. So monthly indicators, the quick snapshot right here, 1 year change in single family sales.
And this
down
is
9%.
So this is May. Okay.
This is May. Yep. This is May of 22.
Okay.
So the real important numbers.
We'll go back to the top again. So again, the high level cut is closings are down.
Yep.
Somebody's been calling for a transaction crash. I wonder who that is.
Yep.
Then there's a guy that says we're going to have a transaction crash and prices are going to surprise to the upside. I wonder who that guy is.
Exactly.
Yeah, I like that guy. He seems to be pretty good at this.
Seems to be on it a little bit.
So, yeah, well, it seems to be on it. Okay, I just wanted to make sure that that's what that said.
That is what that's starting to say. Now, so
I like that guy.
As we scroll, single family home activity.
Got it.
So close, and this is this period, May this year versus May last year.
Okay. So sales are down. Got it.
Sales are down. Median prices up 13.6.
Like that guy.
Yep. Volume and closed sales almost exactly identical.
Oh, that is interesting because because this is what I'm talking about. It's because you take transactions down 10%, but the value of the homes are up. Total dollar value only down slightly. So that's very interesting.
Yes. Yep.
Oh my God, your days on market crashed 30%. Sheesh.
Exactly. 17, Mike.
Yeah, I mean that could triple and you'd be a normal market. Okay.
Exactly. We're not even close. So pending sales about the same. Month supply, we're up 9%, Mike. What are we going to do? We're at 1.2.
Yeah. Again, your inventory could triple before you have a problem.
Right.
Okay.
And so exactly. New listings. So we're really not seeing, and this is what I've been telling you, right? So this is for May.
Yeah.
We're really not seeing the increase in listings yet.
Yeah, let's write this down because this is May data, and I'm on record saying that July 20th is going to be game changing.
Agreed.
So what that means is the June numbers. I'm just going to say it right now. That's going to be double digits. It'll be up more than 10%
increase.
Yeah, more.
I agree with you. I agree with you.
All right.
Yeah, I agree with you.
All
right. And so homes for sale inventory still down. See, 9.7%, and this is over last year.
Yeah, that's crazy.
Right.
Okay.
Percent of list price received.
Jeez. Wow.
Everything here still selling over list price.
Yeah, that's what that says. Yeah.
But this is what's shifting. This is why I love what you and I do. We're in the market every day.
Every day.
This number is going to shift.
I think so.
This number, no, next month, this number is going to shift tremendously.
I think
but
so.
Mike, here's the number.
Yeah, look at that affordability. And again, your scale, just so everybody needs to know their buy box, their markets. My scale is 0 to 100. Yours is 0 to 200. Hence, you have the 103 number there. But any number below 100 is bad in your market.
It's 73.
It's bad. I mean, anything below 100 is bad in your market. That just means that the average person can't afford it. So again, you got to know your buy box, your market. What is happening in your market? Out of staters.
Yep.
Are coming from more expensive towns.
Correct.
Are inundated, and they're coming with cash.
Yep.
Having just sold something or with higher incomes, and they are driving affordability to numbers that ordinarily wouldn't be possible. In a normal market, you don't see swings like this because again, real estate, generally speaking, moves in a trend. What did the Fed do the last 2 years? They freaking broke the market. Housing is broken. It'll be broken for years. This is
is.
not normal.
Yep.
So again, this is why transactions will crash and median price will go up. I keep telling folks, and I look at all my comments. I got like 5 people screaming at me this morning. How can that be? Rah, 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 you're wrong. It's just crazy. It's going to happen. People aren't going to be happy.
So this is my biggest concern is the 73.
As it should be. I mean,
Right.
In my market, a 73, just to kind of relate it to Fresno, probably is like a 13, like unheard of numbers, right?
It's actually worse than that. And here's why. At 100,
Mhm.
that means, or at 103, that means 3% of the people
Mhm.
make enough money to buy the median income, make enough money to buy the median home.
Wow.
We are negative 27 on that number. Negative 27.
Mhm.
That means that the average median income person, you need to make essentially 27% more to afford the median home.
Yeah. And that's why the market is so broken, because you have out of towners distorting this.
Oh, 100%. Well, you already deal with the horrible weather.
Yeah.
So going from a horrible state like Maine, Vermont, and Mass.
So you still have the weather, but the state's better. I got
Exactly. Well, that's really what it's about, is no income tax. We have no income tax in our state, Massachusetts.
Think about that. That is exactly what's happening. You leave California, you save 13.3%. You go to Nevada, it doesn't matter, right? I'm a net positive. I don't give a rat's ass if the property is more expensive. I'm up 13%. So.
Connecticut and New York are exactly the same. Massachusetts is exactly the same. Maine has like a 7 or 8% income tax once you get to a certain threshold.
Well, that's why Tennessee, New Hampshire, Florida, Texas.
That's right.
Alaska.
Yep.
There's 2 more. Is it Wyoming? There's 2 more. It's like 7 or 8 states with no state income tax.
Well, and we also have no sales tax.
Oh, wow.
This is why our economy kind of always chugs and always moves. It's really pro-business. So let's look at the closed sales. Mike, 2020, 2 years ago, 1253. Last year, 1347. This year, 1223. We're almost exactly where we were in 2020 as far as volume.
Yeah.
Then we look at year to date. This is slowed, the number of sales, but it's because it's an inventory issue on our side.
Yeah, you got days on market at 17. That's people look at data like this and say we have a supply problem. No, you don't. You have a demand problem. Your days on market went from 25 or 23 to 17. It's not a supply problem. You got plenty of supply. It's just too many people want to buy.
That's right. It's demand. It 100% is. So median home price, Mike, look at this.
Wow.
Look at that. 319 to 460 in 2 years.
Glad I didn't call for a housing crash in 2020. Glad I'm not that guy.
Some would say if you did, then you'd be an idiot. But
the several idiots, they just delete their videos now. But
right. So this is the craziness. This is the market. So when I hear people say, I can't get a good deal, dude, I'm getting good deals in this kind of a market with great returns.
Mm-hmm.
But this, now you see why we don't, this is all single family home data.
Of course.
This is why we stay away from single family homes.
Yeah, you go to duplex again, learn your market, figure out what works. There's always a piece of the market that works. Single families clearly doesn't work.
Yeah, figure out the pocket. So then year to date, we're already up. Mike, year to date, we're up 16%, and we were up 21 last year.
Yeah, dude, that again, this is why I'm calling for no crash, not even a correction. Yeah, I know you're calling for a correction.
I'm calling for a correction. Yep.
Yeah, we're gonna have I think what we had, again, in hindsight, we had a year and a half where we got all the appreciation for a decade. It just slammed into an 18-month period. Crazy.
So if you also see, so it's here, what's really funny about this chart is that this is actually how our market goes. This is the dead of winter. Yellow? This is the dead. Yeah. This is the dead of winter every winter.
I got you.
So see higher highs and higher, but also higher lows.
Yeah. Some people might call that a trend.
Yeah, one would say. But here's the thing. This is back in 8.
So this is the volume. Okay.
Yeah, this is volume of closed sales per month.
That makes total sense, right? You're going to close a lot less in January than you do August.
We are very, yeah. And so here's the number right now,
So that's May.
right? Do we beat this number of, 800 million in June or whatever?
That's probably
Days on market.
Yeah.
Here you go.
Wow, look at that. So again, days on market, like I said earlier, I said could triple. Look at that. 17, 34, 51. You're back to normal. Like I said, God, it's like I've done this before.
I know, almost, right?
Almost.
So that's the thing is, we would need to triple from where we are today.
Yep.
To even get back to 2020 and 2021, or excuse me, 2019, I want to say was like 63 or 62.
Yeah, probably. Yeah.
So it was even up to the left over here. So, but this was like last year in half. This year, wow, Mike, that's still down
33%. Yeah, 40%. That's nuts. That's nuts. That's crazy.
It is. It's crazy. And
well, the good news is that number is going to go up from here.
Right.
You found the bottom.
Yeah. Well, so here's the good thing. Look at this, right? In 08, we were 125 to 150 days, and we stayed kind of in that market until about 13.
So again, I don't know your market at all, but I would say 2009, 2010 were a fairly close to a balanced market, but a lot of that was foreclosure inventory.
It was. Yep. Correct.
So this is so stupid. Your days on market could go up 800%.
Correct.
And you'd be back to a flat market.
Correct.
Wow, that's nuts.
Correct.
Nuts. And by the way, that's not happening this year. I mean, that's impossible.
But Mike, it's so hard to get a deal.
Yeah, well,
I can't find deals. Like, guys, my market's not easy. Does this look like an easy market to buy into you?
Yeah, this is probably the hardest market I've seen.
It's
the markets
really hard market. Pending
but again,
sales.
what do, right? You network, you take lots of shots, you write offers, you don't stop, you know your numbers, and if they work, they work. If they don't, you move on to the next one. 100%. You don't just sit by your computer and wait for a deal to light up on your phone. You do the work every freaking day.
You have to, and get in front of people.
Yes.
100%.
I got my OVU cards the other day. I got to set those up. So
I know they're fantastic. Yeah. Digital business cards, video on the channel. Check it out. They crush. It's absolutely a way to differentiate yourself and get people to know your buy box with a tap of a card on their phone. Check out for the video. It's a way you're going to change your business. Mm-hmm. But if you look at this, we're basically exactly where we were last year, pending sales.
Yeah, no, that makes sense. Yeah.
But on lower inventory.
Exactly. Well, that's why your days on market is like,
that's right. So months supply.
Oh,
1.2. But see, we almost always have pretty tight supply, even 2.3.
Yeah. Well, look at, so you had month supply again, go back to that 06, 08, whatever. No, go down month supply, that one, that chart blue. And so there was a time where what is that? Oh,
so the blue is condo, the white, the yellow is what we're looking for. We were 125.
So that's like 4 months.
Yeah.
Okay. So you kind of
basically, if you put on in January, you might have sold your house by like May.
Got it. Okay. So again, a 4 months back. I'm just trying to relate to where kind of balance is for you. It's about 4 months, rough and tough.
It is. Yep. About 4 months. Yep.
Okay. Okay.
Yep. 4 months. Well, but see this trend though. See the trend line down. So it used to be 4 months, but even in 2018, it was less than 90 days in the peak.
Well, this is where we're going back to. I think all of these trends, like the Fed broke housing. We're going to have 3 or 4 years of just broken housing. All of these charts will kind of, come down, hit the bottom and come back is what I think is happening. But it's slower than everybody wants. All you crash people, whatever.
I mean, and this is the thing is, these are charts, even in the craziness of 08, look at the time that it took 05 up to 08. And then where's this? There was no real break, right? It was always kind of in a 2 week or 3 week range.
What did your market see top to bottom, peak to trough, kind of 07 to 11 or 12, whenever
values?
Yeah.
I
like
don't think I
20%?
have that. I don't think I have that chart. It was less than the national average.
Right,
so I think national was like 30, and I think
31.
Yeah, and I think we were in the 20s.
Yeah, so we were 75. So
yeah. Oh yeah, no, and Vegas, right?
Mm-hmm.
So month supply, nothing. And this is even, again, this is basically, we're dealing with about the same supply that we had last year at this time.
Yeah.
New
So-
listings.
Yep. So folks, please do this for your buy box, your area, your cities.
Yes.
Again, get the May data. And again, if I'm right and July 20th is game changing, check out the June data. You will see, I think, bounces off the bottom, but we'll see. And this
Yeah.
is for inventory. This is for transactions, not price.
Not price. Not price. Not price. Nope.
This is
And
really
then
well done.
here's the inventory for the entire state. Home for sales, 1,500. We're down.
Wow. That is amazing. That's the entire state.
That's the entire, Mike, this is why I'm telling you, I'm in a tight market, my brother. Like,
Yeah, no joke.
that's 1,500 houses in the entire state. And this counts a $30,000 single family home in Berlin, New Hampshire, that's 5 minutes from the Canadian border,
Oh, wow.
all the way to a $35 million home on Lake Winnipesaukee. Same
Amazing.
difference,
Amazing. Wow.
same number. But these are the challenges. This is, look at this.
Yeah.
This was down 34% from
Yeah.
2019.
So I would have put it at like 4,200. Yeah. So
Yeah.
again, you've got to double, right? And I think that
triple.
starts next month. Yeah.
We got to triple. We got to triple just to get back to 2019 supplies.
Wow. Yeah.
Yeah.
That's why it will take time.
Yep. But look at how strong we are from a percentage of list price
Wow.
received.
Wow. Wow. Okay.
Yep.
Crazy.
And then lastly is the gorgeous affordability index.
That is bonkers.
Straight down.
Straight down. Yeah.
And next
and-
month, I think is going to be worse than 70.
Oh, I think it will. I think it will because you're going to have higher rates and higher prices.
Yep.
You know, unless incomes went up a bunch, it's going to be lower. Yeah.
This is the all property section. So this is where I believe there's value. So the affordability index 114, single family you saw was 73.
Yeah.
This
so it
is
lumped
where
everything together, condos, duplexes.
Correct.
Yeah.
I believe that there's value in the small multifamily because that's still tracked as residential.
Yeah.
We're at 80%. That means if we're at 73 on single family, we're more like 87 on small multifamily.
Yeah. So house
But-
hacking is the way to, if you're going to be, if
Exactly.
you're looking in New Hampshire to buy as an owner occ, you better be looking to house hack.
It's the smartest thing to do. And again, month supply, 1.1, pending sales.
17 days
Yeah.
on market.
Yeah. 17 days on market.
Oh, look at that close. I want to show that one more time. Go.
Yeah.
Transactions down, prices, median price up. God, I
Yeah.
wish I knew somebody that called that.
Mike, median price up 15% and down, and transactions down 7%.
Exactly. I wish I knew somebody who called that.
It's very helpful.
Yeah.
So we talk about this stuff all the time, right? And this was really the reason that I wanted to do this with you is because everybody likes to think that because I talk about 20% return deals,
Mhm.
that my market's easy.
Of course it is. That's easy.
Right. It's just wicked easy. I mean,
Clearly,
I just,
you just shown the data. It's remarkably easy. I don't know.
I showed
know.
everybody that I have the easiest market in the country.
No doubt. No doubt.
And so
yeah.
people must, right? Your takeaway from seeing that sheet, but I think people must build their buy box.
Mhm.
But what do you take away? Because I look at those numbers every month. What do you take away from that versus what you've seen around the country and what you see in even your area?
Well, I think that again, I've seen probably 50 markets to that level of detail now because other people share. And without question, it's the hardest market that I've seen. It's even harder than Texas markets.
It is.
Yeah, it's tough. And again, do the work, buy box, stop whining, look at it every day. And if it doesn't work today, move on to tomorrow. It's, markets come and go. I was shocked at how bad it looked, frankly. I did not expect that.
This is why I think for our market, I think we are due for a correction because those numbers are they're just too. I mean, 73%
I got to tell you,
affordability.
I don't see it. I really don't. I
Maybe.
disagree.
Maybe.
I guess it's all about timing. And again, let's define numbers, right? Corrections 10%.
Yep.
Crash is 20. Okay, let's get that out of the way.
Yep.
I mean, when are you still thinking this rolls through next year, 2023? You get somewhere 6, 7, 8 negative.
Yeah. I think in 23, and into 24, because I don't think everything's happening faster.
Oh, I agree with that. I agree.
Everything's happening faster. And so
Totally
all I'm trying to do is I say, you know what? Everything's happening about twice as fast as it usually does.
That's probably fair. Yep.
And so I'm calculating that normally this would be something that I think we could kind of more ease into.
Mhm.
I think it would be a little bit easier. And I would think 24, 25 will start to see maybe some adjustment or flat right around there. I
Yep.
think because everything's happening twice as fast, I think that we start giving money back this year. I think
Okay.
it happens in 2023.
Okay.
Um,
I love,
and
I love it that we disagree.
yeah,
Because I
I
know your
hope,
market, your buy box. I'm looking nationally. I can't see how median price, the national median home price goes down this year. I just can't see it.
I think for us, like this became an unaffordable market.
Clearly 73, no
Yeah.
question.
Like
But until you got to have what has to happen
yeah,
is you have to have the boomerang, and which I think is happening in Boise, right? People from
I agree.
California went to Boise. Boise had its worst winter. They might not boomerang back to California, but they're getting the hell out of Boise. Problem. So, for
It ain't
example,
coming into New Hampshire.
no, exactly. So what happened is you had all this influx of out of state money come in, kill your market.
Yes.
I don't know if people are going to leave New Hampshire and go back somewhere else. I don't sense the
Yeah.
Boise factor. And that's the, like, if 15% of the people that came to New Hampshire in the last 2 years left in the next 2 years, yeah, I think you can have a correction, or yeah, no problem. I just don't get the feeling that that's happening. I think people like New Hampshire.
Yep.
I think they like the cost of living increase, right? It's better for them.
Yep.
I don't see people hopscotching. I think Boise, they're going to hopscotch. Ooh, went to Boise. It's really cool.
Sure.
Oh shit, it's cold. I'm leaving, right? I don't
Yeah.
think that's happening in New Hampshire. So I don't see a negative number all year.
So here's the inside baseball on New Hampshire, and it will apply to Texas and it will apply to Florida as well,
Okay.
but mostly New Hampshire.
Okay.
New Hampshire has some of the highest property taxes in the country because we have no income tax.
Of course.
And we have no sales
No
tax.
sales.
We have to pay, but we
Got to
believe
pay
in
somewhere.
we believe in balanced budgets, so we pay for stuff.
Yeah, of course.
So here's what I believe happens.
Okay.
In the last 3 years, you've seen folks that might be 65, 68 years old on a fixed income, 75 years old on a fixed income. If you look at demographics in our state, we're a much older state.
Yes, I would believe that. Yes.
I believe what happens is that a lot of those property tax bills have gone from 4,000 to 7,000.
Probably. Yeah.
I believe that people look at it and say, we need to sell this house because we can buy something kind of older community, retired community in a Florida, still a warmer state. We wanted to move. We're going to move up our move because we can get that sale now at a number that is higher than it's ever been ever. We can get our exit. We don't have that crazy, ridiculous high taxes, even though they're higher in Florida. The property values are much less and there's much more density in Florida.
Yeah.
Here, there's not a ton of density.
Okay.
Only in 2 or 3 cities. So that's where I believe that shift is going to come from, is because I think people are going to have to, basically, I think they're going to have to bail.
Yeah. I mean, again, one of the sad things, again, in California, we don't have that because of Prop 13. That's
one of the greatest thing that it's probably one of the few great things in California.
I love Prop 13.
It is. Prop 13 is awesome.
That's why we have teachers who have lived in a home for 50 years that have gone from $100,000 to $2 million. Because if their property taxes reset, they would have had to bounce, and it just doesn't because of Prop 13. Because you don't have that. Yeah, I mean, I could see that. It's unfortunate that as home values go up and as property taxes reset, it hits everybody kind of the same way. And if you're on fixed income, at some point taxes make you sell, right? You become what I call a forced seller.
That's right.
So yeah, I mean, inside baseball, you're right. That's not something I experienced in California, but yeah, I mean, again, you have no sales tax, no income tax. You got to pay somewhere, right? So,
Mike, I pay well into the 6 figures for property taxes every year. Well into.
So do I.
Yeah.
So what?
I tell you, I do like that no income tax thing. That's pretty.
Yeah,
fun.
I bet you do.
It's pretty
All
awesome.
Right,
and
show
sales
off.
tax too. Yeah. But yeah, I mean, so I really appreciate you going through with me, because that's what I think, that a lot of people think that the grass is always greener. Everybody else's market's so much easier. That's my market. My market is 17 days on market. My market is 105% of realized sales price. My market is a 73 affordability.
Yeah. I'm going to love to look at this in 2 or 3 weeks when the June data comes out. 'Cause
Me,
again,
you and me both.
I think July 20th is going to shock people when National Association Realtors put out the numbers for June.
I
It's going to
do
be different. It's going to be fun.
completely agree. Mike, thank you so much for the time. Tell everybody where they can find you, my friend.
One rental at a time, YouTube, Instagram, and live stream Saturdays at 8 a.m. Pacific.
It is. Don't miss it. And books too. Lots of books.
Books.
Lots of books. So Mike, thanks so much for the time. As I always say, we try and create great content for you. Hit that like button, hit the subscribe button, make sure that we know that you're having fun. And if you disagree, put in the comments below and I'll actually go back and forth with you. Because I don't mind. And quite frankly, I don't get enough questions. So it's quite all right. Mike, thanks so much for the time. See you in segment 2.